Okay, good morning, everyone. Welcome to this live intraday strategy webinar. Today is Thursday, November 29th. Good to be with you guys this morning. We got a light crew. I think there was some miscommunication and some people think I'm out today, but I am here for the webinar. I do have a flight I have to run to, so we can't keep it too long, but definitely look over all the setups that we have pending heading into, obviously, guys, heading into the close of the month, right? Tomorrow's the last day of November trade. So good time to lighten the load on any new positioning that you do take as we head into the final month of the year. On the menu for today, we're obviously going to take a look at the DXY and where that's trading on the back of this recent reversal. Euro, Aussie dollar with an interesting advance, dollar CAD, and then we'll circle back to the Kiwi crosses at Kiwi dollar, Kiwi yen, and we'll hit Aussie yen. Gold will be last on the list. I will be putting, I did put an update on that last night, so you guys have the levels for that, but probing the break that we're looking for in gold. So it's kind of make or break here into the close of the week. As always, questions, trade setups. Ty, are you in the room? Yes, Ty. Hey, we'll take a look at Euro Yen for you. I'm not a big fan, to be honest with you, of the levels, Ty, but I'll show them to you. That weekly chart is kind of where I'm starting to root the interest in it, but we'll take a look at the near-term levels for you, no problem. Good morning. Hope all is well with you. As always, amen. Same to you. Always a pleasure. So here's what we look like, okay? Last night's update. So the dollar index, really quick. You guys are sick of seeing this chart, but I'm going to show it anyway. That same slope, right? This week looked like it was a disastrous break to the upside. The week in mid-November looked like it was an absolute break to the upside. Both failed, okay? And look at this. Again, look for conviction. Resistance, resistance, resistance. Those two reference points, real near term, are marking divergence, let alone the larger divergence signal with the July highs and the November highs. So, man, the risk is there, in my humble opinion, and we're just looking for follow through on this. Did you give any thought to the ability to see and copy your screens? So, Ty, I'll discuss that with Jamie. With something we'll look into. It's, we've been approached with that idea before. There's some copyright issues and stuff that we have to take into consideration, so I'll let you know. But for the DXY, the weekly close is paramount here. Okay, if we close below this slope again, it would just further sort of give the risk for the downside move. Here's dollar CAD, or here's dollar index rather, on the daily chart. Really clean. The ascending formation just from last year's low and this year's low, upper parallel resistance. Call that a false break. Another tag. And on that move yesterday, guys, an outside day reversal bar off monthly highs certainly seems pretty good. Certainly seems pretty good. So, look, the first things first that we need to get out of the way is just get below this channel support. It is a 4-point touch. 1, 2, 3, 4. You can count a fifth one here. So certainly this trend line does, carry some weight. We do get the downside move, clear-cut targets. Initially 96.22. The bigger one, 95.68, 95.76, okay? That's your monthly opening range lows. That's the initial high day reversal bar that we made here in October. You got the 50 line for the upslope, and just lower that 100-day moving average, which has been a very decent pivot in price on both sides. All right, so we need to see this break to validate the reversal. Bottom line, here's the intraday charts, and this one certainly looked pretty darn good. And here's what we looked like last night. So my base case scenario was to look for entries at 96.93 here, weekly open resistance, or ideally 97.06, 97.07, 97.08, excuse me. It's the monthly open, it's the 618, and then you have the 50 line in there as well. You got as high as 97.01 before turning. Is that it? Don't know. What we do know is if we do break that 618 clear pivot on basic slope, that would validate the drop. That would validate the drop, okay? Or it would also suggest and confirm that a more significant near-term high was put in here. So look, a lot of people are asking, well, did anything change yesterday? Did the Fed say anything? I don't want to get into the Fed talk too in depth, but look, at the end of the day, the only thing that happened was the Fed sort of came out a little bit, I don't want to say dovish, I want to say less hawkish, right? In that rates were close if not near to neutral rate. Neutral rate basically means what the Fed sees as a long terminal rate in interest rates. So that would suggest that there's not many hikes pending. Obviously, the dollar reprices. Obviously, stocks loved it, right? You saw stocks rip higher yesterday. Interesting thing is you didn't really see that too clearly in treasuries, which is, again, sort of an indicator there. You want to use some caution here. But long story short, 96.61, a break below that, aside from it being confluence support of the 618 and slope support, it's the objective range lows for the week, guys. So if it gives out, objectively, you're looking for that late week low. Again, initial targets 96.15, 96.32. Bigger target 95.88, 95.90. That's an exact extension, guys. That's a 618 retracement off the low and a 100% extension off the high. This is all prefaced that we stay below 97.08. If we get through this again, I'll take a side step at that point. But certainly a nice hold here, at least at the weekly open overnight. Any questions on the DXY? Here's the farther outlook on what that looks like. Really clean. You just need to get through that 96.61. OBG, please again. Ty, say that. What is that? Can you say that again? What's OBJ? Objective on what? If we break to the downside, Ty? This is your first target. Take a little off here. 96.15 into 96.22. But the more important, significant range I'd be looking at would be down here at 95.90 into 95.88. Just right below 96. Okay, you have former slope resistance, might be a decent offer of support. You have a 100% extension off the high, 618 off the low. Really nice cluster there. And if you look at the daily chart, you know what I mean? This is this spot right here. Nice little cluster of former range support as well. Make sense? Eman says no weekly close below 95.16 means we'll carry November opening range to December trade, right? If it doesn't break 95.15, yeah. Why 95.15? Oh, 96.15. Yeah, I would say that. You have to keep in mind one thing, Eman. The low of the month is actually down here. That comes in at 95.68. So this is just a low spike from November 18th, but the actual monthly opening range low comes in down here. Again, why I'm highlighting this sort of bigger region down here. Does that make sense? It says, okay, got it. Right on. Right on. All right. So the levels are clean. We kind of need to see the momentum push, but certainly an outside day reversal off the highs does put a bearish tone. We just need to see a break of this channel, this near-term support, to get things going. So that's DXY. Number two, Euro, very similar situation, right? DXY flirting with multi-year trendline resistance on the weekly basis. Euro, same gig. Okay, we've been talking about 113 on this thing for weeks. That's the former swing high from the 2016 November high. Pivot break here back in May and June of last year. Support. We probed through it in the start of the month. We probed through it again this week. No luck. Here's the close. Okay, here's the close. So once again, the threat is still $4 pullback, Euro strength. Weekly, we want to see this thing close above 113. It is critical, guys. Again, 200 long, weak moving average, former swing highs. You have former pivot or former slope resistance, 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 breach, support, support. It's all loaded up right here. So I'm still favoring playing alongside of Euro. Watch the weekly close above 113 is absolutely critical. Here's Euro on the daily charts. I'm long at 112.85. I cut half at 13.85 and put the rest at break even. Eman, I love to hear that. Love to hear it. So here's Euro on the daily charts. So very similar. Again, DXY, not to be a broken record, but we need to see a break of this near-term descending channel, just like in the DXY, the ascending channel. Here's the descending play in Euro. We need to see this break to get this thing going. So look, where you got out, Eman, part of that trade is ideal. It's exactly how I would have played it. The intraday chart looks like this. Here's what we looked like last night on the Euro. So I added this pitchfork yesterday. I kind of hinted that I don't have that much, what's the word? Conviction on that slope just yet, or as of last night, I didn't. Why? Well, it's because it's the first reference touch. But looking back, after I applied this pitchfork on a shift, modified shift basis, you can see the median line, decent pivot, support, pivot break acceleration, resistance. Then yesterday's stretch failed right there. So in yesterday's piece, we said we want to stay constructive above 113.12, 113.13. Ideally, you get a drop into either 113.40 or 113.27 for entries. Look at this thing. Look at this thing. It came right back into former channel resistance. Let me get this into a 120 minute. Okay, it came right into former channel resistance, turned support. So we stretched into that 618, came back, tested this as support, and here we go for the rip higher. Now, what I don't like about this advance, and you see this advance in some near-term charts also on some of the majors, Aussies showing a very similar reference, is, if you get real near-term and granular and price action, guys, well, maybe that's too much. It looks like it could be a 1, 2, 3, 4, 5. So that says, again, all to suggest that you could see still a little bit of a pullback. So I don't want to change those levels from yesterday, guys. On its face value, this thing made a test of the opening range high, and while we flirted above it, the break still took us in resistance. So I understand there's the break of the weekly opening range here. We'd want to see this close near the highs. If you're not already long, there's nothing to do here. Eman, you're already in the position. Stops at break even is the way to play it. If you're looking for new exposure, if we get a pullback, I'm looking for failure at one of these two levels for the top side break. And if we do get that top side break, guys, 114.26 is soft target. 14.72, again, soft target. This is the monthly opening range highs. And this is your big Bahama Mama, 15.15, 15.25. Big region. Again, very similar. 50% retrace off the high, 100% extension off the low. So the levels are super clean. I want to see this pitchfork give us some help here. Can I get the daily photo, please? Eman, that's for Thai. Thai for Euro? Yes, here's the daily photo. Here's the daily chart for Euro. Keep in mind, Thai, it's the same as last night's. So you can see the weekly and the daily here from last night's update. Same levels. Any questions on the Euro? He says, got it, right on. Your strategy to shelf half in a critical level and rest break even. I got that from you, Mike. Oh, amen. Cheers. Listen, yeah, I mean, I'm a big fan of that. I take more break even hits than I'd like to admit, but I'd rather take a break even hit than regret a position that I was looking to press. And a lot of times, guys, it does bite me. And I'm sure if you've been working with this for a while now, I know sometimes it sucks because you'll get stopped out at break even and then the market will rip in your direction. And that happens, right? I'd rather miss an opportunity again than be regretful of something I'm sitting in. We have to stay humble, and going break even is the quickest way to sort of mitigate your risk if you're looking to play the push through here. So yeah, it's make or break here. Outside day reversal on Euro as well, off of Fibonacci support. We highlighted that yesterday as well. That's bullish. Here's Euro on the intraday again. If we hold above these regions, bullish inbound, still going to be down here. Okay, the 618, by the way, we have to stretch that to the new high. So that gives you this coupled region here. Get rid of that 618. 1335, 1340. And then I wouldn't really stress that 618 anymore at this point. I'll kind of just remove it for you here. But just note that monthly open support, that's bigger. If we break back below the monthly open, I think you get the spill. Ideal scenario is we hold off one of these regions. Again, the top side pop here, if we get it, should see acceleration. I don't want to see sort of a near-term meander higher. If we break this, it's a basic channel resistance. I don't want to see acceleration upside. Okay. Questions, comments on Euro? Again, guys, we're heading into the end of the month, so I try to keep things as objective as possible. We're heading into the close of the month, and the November opening range is still intact. So, Eman, a little different from the other setup that we were looking at because the opening range was lower. Here, you're right slap in the middle of the monthly opening range. So, absolutely, next month, the break of that zone should offer some guidance for sure. Okay, number 3, Aussie. So, another beautiful trade that we've been following for a while. Well, let me start off on longer term charts here. This is the deal with Aussie, is that, whoa. Okay, I might have made a little mistake there on the in the glitching here, but here's Aussie dollar for the weekly charts. The main reason I personally haven't been playing anything long beyond 73.27 is because of this weekly chart, guys. Absolutely critical here. Now, what I am getting concerned about is that you are in the midst of making an outside weekly reversal into resistance. That can be 2 of 1 things, guys. This could be either sort of an accelerated breach, and if that happens, I want to see us close the week above, or this also can mean exhaustion. An outside day reversal to the upside into resistance, a lot of times is exhaustion. Just like an outside day reversal, I mean, the ideal scenario would be an outside day reversal off the high for the downside. This could mean exhaustion. Don't think that's the play, but this is a clear pivot in price on the weekly standpoint. Go look at my cursor going all the way back to 2015. Okay, so 73.85 on a weekly basis would validate a breakout of this formation, in my humble opinion, and that's what we're looking for on Aussie to get this thing going. Okay, so any longs that you take, watch this super key region right here. It went right through 73.35. On an intra-week basis, yes, Ty, but on a weekly close basis, we need to clear this zone to validate the breakout. Okay, so that's the weekly standpoint. Daily looks like this. 73.27, 73.36, nice little region we've been watching here. Again, we're trading there right now. A daily close above this tighter region would also help us validate the breakout. And again, your first target would be that 50%, that 50 line or the upper 75% line, and then up into that cluster region there at 74.50s. Look, the issue that I have here, again, if you're holding a decent position from below the median line, hold on to it. If not, there's nothing to do on the long side here, again, from this level. In fact, even if we do close just at or about this region, you're marking some pretty radical divergence. So again, it's one of those trades where this is the pivot point right here. Okay, if we get through this, I'm all about the long side of Aussie. I love it. But seeing on where we are on the weekly charts, on the daily charts, and on the intraday charts, this is the level to watch with great interest. Here's the Aussie intraday charts. Dun, dun, dun. Here we go from last night. So for me, the play here, if you didn't get that rip yesterday, was to find a pullback near that 100-day moving average. The 618, which obviously moves now because we made a new high, guys, so I'm going to delete that. But this was the obvious key entry that I would have liked to see get into. And again, I can't, there's nothing to do here on the long side. Can we try to short? I mean, you could try to short this, but the one thing I would tell you is this is an objective break of the weekly opening range. Here's our weekly open, Monday high, Tuesday low, Wednesday break. You look for a Thursday, Friday high. So if it stretches into 73, 75 or the upper slope and you see failure, you probably could squeeze in a short, but I'm not a fan of that play. we're trying to validate. Just remember on whole, Pete, we're trying to validate the break of this descending yearly slope. So I'd rather look for pullbacks to buy, but we need to see the necessitated break above 73.36, 73.27 near term. Make sense? Interestingly enough, it's funny that dollar CAD is actually my favorite setup over the last couple of days. Maybe it's because I was being stubborn. I kept on trying to short it, and it's working now. But any questions here on Aussie? Let's jump in dollar CAD next. Here's the dollar CAD number 4. So for Aussie, watch again for here. Watch the weekly close. If we close above this region, I'm all about the breakout. If we close below, I'm gonna have to be neutral heading into the start of December trade. See if we can't get a pullback to get back for the rip. But we want to see a pivot break to the upside here. What's next? Dollar CAD. So for dollar CAD, the weekly chart isn't all that hot. But certainly where we're turning ahead of is something interesting. So 33.75 is a 50% of the yearly decline off, or the multi-year decline off the 2016 highs. Yearly high for 2018 is in that region. Okay, here's the spike. Really failing here. The momentum barely holding 60. So the weekly chart, nothing really turns you on here. The only thing I want to highlight is we need a break below 31.30, which is the high week close for the year. That's still preserved, right? Because we never topped those highs. That's 31.30. Daily chart for dollar CAD looks like this. So from yesterday, same levels, okay? The high day close for the year came at 33.40. We spiked just above 18 pips or so before failing yesterday. Again, a big old reversal candle off of the high day close for the year. That's bearish, objectively. So, I kind of like finding some downside momentum here. Not really looking to get too aggressive on it. The only thing I want to see right now is basic channel support. One touch, two touch confirms, or one touch, two touch, three touch confirms. You even got a fourth here. You got to break that level. Now, that's 32. The big region, in case you're not sick of hearing it, is still 31.30, 31.55. That's still the pivot region I want to see close below in dollar CAD. Okay, so looking for resistance here. And obviously we talked about the momentum divergence that you got with that last high, right, in price. On a daily standpoint, a higher high, a lower high. So do we get the turn? Hopefully this is not a fake out like it has been for the last couple of weeks. So here's the intraday chart looks like. Here we go. So the level that we were looking at yesterday was actually the exact level to get in at. I told you guys to look at 33.15. We didn't quite make it there. The high was 33.12 before failure. So look, I don't want to say if. The first level to watch is right here, 32.56. We're checking that level right now. If you're holding shorts from last night, or if you took the short with that whip back into 33.15, do something here. Okay, take a little off, go break even or better. The downside move targets two levels. A, your weekly open, just a soft target, maybe peel a little bit off here, 32.21, that's your weekly open. There's that basic slope support. And this is a very clean formation, guys. Look how far back this goes. October lows, 2, 3, 4, maybe. That's the level to beat, to look for that drop into that key pivot at 31.30, 31.55. Okay. Well, I would agree with that. As of right now, I'm bearish sub 33.15. I'd put bullish invalidation at 33.40, but if we make it through these highs, guys, we're probably gonna rip. So if we do make it through, or if we do approach the high day close, I wouldn't try to press another short. I kind of just let it go and see if we get failure up there. But for my positions, I'm looking to lighten the load down here. Any questions on dollar CAD? Pretty nice move here, guys, overnight. Hope some of you caught that. Failed exactly or just ahead of what we wanted to see. See if we can't get that drop into channel support. Okay. Number 5 will be Kiwi. Beautiful play. Also a beautiful play. So here's what Kiwi looked like earlier in the week. We'll come back to gold in a moment. But here's the Kiwi setup. Really nice. Looked like a bearish flag formation. We highlighted 68.20. That's the level that needed to break to get this thing popping higher. Now we need to best the 200-day moving average at 68, 69, 68, 70. This is moving obviously in time to validate sort of a larger breakout. But our base case scenario since the start of the week was look for exhaustion either at 67.52 or ideally down here right near 67. So this level held. And into the trade session last night, and we're heading into, well, I guess it was yesterday, you had a very clean weekly opening range. Topside breach should have you looking at that upper parallel. Here's Kiwi now. Okay, we're checking parallel resistance, plain and simple. So a very clean break of the weekly opening range. You set a high, you set a low, you test the high, you get into consolidation. There's the pop. The break of the opening range highs also invalidated the descending slope. That's your first level of resistance. We're there right now. Okay, so what to do here? Again, it's a very similar scenario to all of these trades, guys. We're heading into the close of the month. I mean, tomorrow's price action, I lose a lot of confidence in the last day's price action for the month, just because there's so much meandering and jimmy jamming for positioning that for a short-term guy like me, I can really get chopped up. So I'm happy. My leave over the next couple of days is well timed at this close of the month, but all things held constant, you know, Kiwi, we're looking for a break. Remember, we talked about in Tuesday's webinar the different slope that we're looking at on the daily chart and the intraday, right? The intraday slope. We've been working with this high just ahead of that previous high. It's offered some really clean intraday pivots, but on the daily, this kind of looks pretty clean, right? Either way, the same levels are sort of highlighted, right? We're now at 200-day moving average. Top side, there's a 50% convergence on the daily resistance, 69.30. 69.30. June open is 60, basically 70 handle. Again, nothing to do on the long side here if you're not already long. But clean weekly opening range break. Please don't hit your head. Ty, what are you talking about? Okay. Any questions on Kiwi? It's make or break here. I do want to see the breach, but again, keep in mind, there's a reason that I keep reflecting back on these longer term trends, guys. Keep in mind where we are in weekly support for Kiwi, or weekly resistance, rather. See this level? We tried to push through it, the upper parallel earlier in the month. We double backed pretty hard. Here's the secondary attempt, the low week reversal close. Let's take that 3 times fast from May of last year is right here at 68.54. We've been unable to make well, on the breakout, we did close just above it, but it would sort of keep us looking higher. 69.30 is critical from a weekly standpoint. You got the 52-week moving average and the 50% retracement of this year's range. Okay, so 69.30 turns out to be a big level in Kiwi dollar moving forward. That's this level right here. Yeah. Whoa, Ty's paying attention. Yeah. Yeah, no worries, Ty. Again, it's not It's a medical thing. It's not from a behavior thing. So I'll leave it at that. Okay. Kiwi yen looks like this. Another one where I told you guys I was kind of scared of. I still don't know what the heck is going on with dollar yen. It's just all over the place. The yen crosses that I've been presenting to you guys on the intraday charts have been the ones I've been watching. That is Kiwi yen. That is Aussie yen. Um, I tried to put a piece together yesterday, Ty, for you on euro yen. The levels, I have levels for you, but they're not very high conviction levels, so I don't want to put them on the intraday page. But I'll show them to you later, right after we do this. Kiwi yen. Um, the setup that we were looking at earlier in the week was this. It's the same parallel that we were following last week. Here was the weekly open. If this break is legit, is what we were talking about on Tuesday here, we should be looking for 78.08 and then that upper parallel. Okay, really nice slope. It was making a very nice topside push here. This is last week's open as well. Pop right through. Here's 78.08. Okay, here's 78.08. So if we're going to get a pullback here, I want to look for support once again near 77.40. Top side, levels are unchanged. That slope now comes in somewhere around 78.40 and change. The bigger level, 79.45. That's the upper parallel and the 618. Okay, at this point, I would bring up bullish inval. I wouldn't leave it at the weekly open, right near the median line. Okay, that median line off the low, really clean formation. This is the 618 parallels, resistance into the 618, resistance into the 618. On the downside, some symmetry, support at the 618. So, first level target, 78.40 and change. And again, beyond that, you're looking for that key 618 on the upside. Interim support, 77.40, 77.39. Bullish inval, I'll keep it with that slope right now. Questions, comments, concerns on Kiwi yen? All right, Kiwi yen number 6. Number 7 is Aussie yen. So a very, very similar scenario. It's basically looking at the same trade almost. Here's Kiwi or Aussie yen. The difference with Aussie yen and Kiwi yen is such. Okay, so the Kiwi yen has already taken out the monthly highs. They're basically challenging highs not seen since June. If you take a look at Aussie yen, we did score through the highs, but we haven't really made it that efficient push yet. Okay, so very similar to Aussie in that it broke to the upside, but you're now checking that major 73.27, 73.36 resistance level. Here's Aussie yen doing the same thing. 83 is huge. Why is 83 huge? Don't ask. Don't take my word for it. Look here. Okay, look here. Here's your Aussie yen on the longer term charts. Basic slope support off that low from June. Again, I don't want to use that major huge wick out to the bottom there in 2016, but 1 touch, 2 touch, 3 touch confirms, 4th touch, 5 touch gives you acceleration, resistance. Okay, so we're looking at that slope from 2016. Add to that the 38.2 retracement of the 2017 decline, 83. Add to that the 52-week moving average, your yearly moving average, right there as well. In case that wasn't enough, here's the median line for the pitchfork off the 2016-2017 highs. Support, a little messy here. Break, acceleration, resistance. Same spot. So from a weekly standpoint, looking at this objectively, this thing is at big resistance. And this is a major make or break point, guys. If this is a break of the ascending channel formation, test as resistance, maybe a second time, but that should ultimately give us breakdown if we are breaking down. I'm of the mindset that you do correct higher. But I just wanted to show you this chart because heading into the close of the week, the first thing I do when I get back is see how we close this week. If it closes above 83, that bodes well. Now, the next big level is not too far away. It's 84.40s. Okay, but there is range here, room to get some more upside if we clear this level. Until we do, 83 is resistance, 83.05. Okay, we got the nice trigger break here in momentum. This is not divergence. Remember, price action did not make a lower low, but certainly that trigger break does bode well. We want to see some follow through here on a pop higher in Aussie yen. Here's what it looks like on the daily chart. Okay, she's not the prettiest, but here's what we looked like early in the week. This was resistance at the median line. We're constructive above 81.33. You need to get through 83.05. That's what we're checking right now. That's what we're checking right now. Any questions on Aussie yen? Here's the intraday chart. 83.05, again, 83.25, this whole zone. Ideal scenario, you're going to pull back. The range high for the week would be a beautiful play if we can get back to like here. If you want new, fresh, long exposure, okay, that's like 82.56, 82.57. It's your weekly opening range highs. If we pull back, that's also former slope resistance, also the median line for the upslope. That's where I'd be looking for possible reentry. On the upside, guys, June high day close comes in at 83.61. June high at 83.94. So let's scratch this. That's your new bullish inbound. That's near-term support. Those are your top two targets. So a little frustrating for me because I'm only in a couple positions, but these positions that I've been watching all week that I really want to get involved in, I just can't do anything. It's the end of the week, the end of the month. We're pushing, extremes on the daily chart for so many charts, guys, where it needs to pivot on the weekly basis above or below. Here's Aussie yen. Here's Aussie dollar. Need to clear it. Here's Kiwi dollar. Need to clear it, right? There's just so much that is sitting at a really major critical pivot in price. Any questions on anything we've gone over so far, guys? Any of the yen crosses? Aussie, Euro. Okay, let me hit Euro Yen here for you, Ty, and then we'll jump into gold. I know there's a lot of gold traders in here. So here's the deal with Euro Yen. So Ty, the level, what you saw me publish earlier in the week was this. Where is Euro Yen? There it is. This is what I published earlier in the week. So for Euro Yen, it's really like this is the entire range I'm looking for. You got the 200 long weekly moving average. You have the low week close for the year, that is 2762, converges on that moving average. Just lower, you have this slope. And certainly this slope originated or derived off these two reference points has been very instrumental as well. Resistance, pivot break, acceleration. Support, pivot break, acceleration. Again, acceleration when we broke to the upside. Support, support, support. That's the level you need to beat if the euro is going to break down. For me, I'm looking for a break of this near-term range. Okay? Daily chart looks like this, Ty. Okay? Another reason why we're at resistance, here's your 100-day moving average. And here's a parallel of the slope we've been following from the highs that we just made in August and September. The lower parallel of this formation caught the lows. The median line hasn't been that clean, but we took a parallel of that, and it's been pretty decent pivot. Support, support, break, acceleration, resistance, 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 right here. Okay. Now, for Euro Yen, the weekly opening range, Ty, did break to the upside. So that would call a bullish play into the end of the month, into the end of the week. Well, I guess month as well at this point. But my problem with that is that you're still coming up on big resistance. Remember, we can't take any singular signal as like an end all. So while some of the opening ranges did break to the upside, it still takes price into resistance. And at the end of the day, resistance is resistance, support, support. That's the most important thing. So here's, put it simply. Here's what the intraday chart looks like. This looked to me, again, last night like a break of the weekly opening range. But again, That gave way. We came right into median line, and that's where we held. If it was a true opening range break, I'd want to see some acceleration, right? So this near-term slope tie is just off the lows that we made in October, okay, and then the into the close of the month last month. Again, a 618. I think this is the 75% line, if I'm not mistaken. Yep, the 75% line, almost support, call resistance. These are the two levels that we were looking at on the daily chart. Okay, if this is legit, if this breakout is legit, this is how I look to play it, Ty. If the breakout is legit, we'd want to see support ahead of 28.53. Topside targets are the 100 and 200-day moving averages we were looking at on the daily chart right here and here. Okay, I give you an estimate on these intraday charts. So it's around 29.40 and 29.80. Ty, does that help? Always feel free, guys, to throw out questions on pairs that you're looking at, and I'll always be willing to share what I'm looking at with you. But unless I have conviction or I'm really trading on my own account, I really won't put it in the reports. Just because I have a lot of setups like this where the levels look clean, but I just have no clue how it's going to play out. So Ty, I try to keep my focus on really what are the cleaner setups. This kind of price action scares the bejesus out of me because a guy like me, we'd probably get a whole lot of break evens on this, if not take the loss. So I want to clear this range, either above that slope that we were looking at in the weekly chart, get this thing going, or if we break down below the weekly open, it could really just completely dump. It's a yen cross. So I put anything past this thing. He says, yes, I'm trying to really get good with this pair. Cheers, Ty. The only thing I would tell you, man, is try not to put so much stress on, I want to trade this pair. Put more stress on, Ty, I want to trade the cleaner setups. A lot of times I get people emailing, do you trade Swissy or do you trade Aussie Kiwi or some of the exotics? And the point is, guys, I'll trade anything if the setup's there, right? My big recommendation to all of you is not to bear too much on your plate. So Ty, with that regard, yes, try to keep your focus on a couple of different setups that you're looking at and tracking, but don't get married or glued to one pair. If there's no setup here or if near-term price action just isn't manifesting itself, it's kind of pointless to get overly stubborn on it. So I'll leave that at that. I think Euro yen is going to be a decent player. I just from these levels, if you had to put a bullet to my head, I'd say look for that break above that slope to get this thing going for a little bit more of a pop. Let me just see what this looks like. %100% extension right there as well. So that is, again, highlighting the level that needs to give out for this thing to validate a breakout. All right, trying to broaden my universe. Right, I'm all with you, Ty, 100%. My point being is just try not to narrow your focus where you kind of focus on one trade that even if there's not a setup there, I'm watching Euro yen, so I want to trade Euro yen. It could lead to some hasty decisions, but hope that helps on Euro yen. Gold, last but not least, to wrap up the week and the month. Here's gold. I will be publishing the weekly forecast, or actually, no, it's going to be an intraday update on daily FX before I head out today. Here's what we're going to talk about. It's essentially the levels that we've been following all week long for gold. Here's the update from last night. Our idea to look for a low to fade this week got deeper than expected. I really wasn't looking for, let me say this, we wanted 1214, 1215 to hold, right? Why? Well, the monthly open is there. Swing lows from last month is there. Former swing highs are there. It's just such a beautiful spot. We got deeper than expected, almost as low as 1210, but at the end of the day, we never materialized a daily close below. And the intraday lows were found support at that 100-day moving average. Okay, so the only emphasis on this is on a break of this near-term slope to get this thing going. Last night, What do you do with that? Last night, literally, when I wrote this trade, guys, gold was unchanged on the week. We're literally just sitting at the weekly open. Okay, if we get through this level, 1232 is just a soft target. You're looking for what? The major key resistance we've been talking about for weeks: 1236, 1238. Okay. I am also long gold at 1213. I cut a half at 1227. Nice play with break even on the rests. Man, you're doing well. As you said before, it does not give much push behind 1230. Yeah, I mean, we need to get that pop. It's got to get this. This level has been just rock solid. Again, don't take my word for it. Look for yourselves. Here's the December lows from last year. Here's the June opening range low before the break offered the decline. Here's the highs that we set last month. Here's your monthly opening range highs. We're right slap in the middle of the monthly range. So no change to any of those levels from last night. Constructive above 1209, or that's bullish invalidation at this point. Just a weekly opening range break today would just be great. Weekly open, set a low, you test the highs yesterday, here you are again. If you pop through this objectively, you're looking for a Thursday, Friday high. Ty says, trying to get good with the commodity currencies at your recommendation. Yeah, I do love trading the commodity currencies, Ty. I like I've always told you. And again, it's not because of a favor for Australia or Canada per se. It's just, again, my inclination to look at those pairs is sheerly based, Ty, on the fact that they just tend to move technically cleaner. So yeah, I'm all about that. But the crosses, especially the yen crosses, man, whew. They call sterling yen the widowmaker, the dragon. There's all kinds of names for it. Euro yen, same type of deal. And that's because the ATR is larger, the volatility tends to be larger, and it's a yen cross, so it's automatically on our list of abominatory abominatory trades. All right. Any other questions, guys, before we wrap it up for the week and for the month? Don't forget, Jamie's going to be up with the midweek strategy webinar later in just a few hours. There will be no updates, guys, until Tuesday night. My flight gets in, so I'm hoping to have an update for you guys Tuesday night for the Wednesday trade session. If not, I'll let you know. I'll tweet out. But all things held constant, my flight's supposed to get in a decent hour, so I should be able to hit you guys with an update on Tuesday night rather. Best of luck trading, and guys, take it easy. Again, monthly close, weekly close. Don't get jackknifed on this, okay? Will you have a session on Wednesday? No, we will. The next webinar will be on Thursday, guys. That's a good question. Thursday morning. Eman, no, you will not have a weekly report. So Eman saying thanks, wishing you the best. A simple question: will we have our weekly report on gold on Sunday? So you're talking about the one on Daily FX? No, but you don't need to worry about that, guys. All the setups, you might see them a little bit on Daily FX, but they're all presented here first. So Daily FX gets the ancillary stuff. Okay, so all your gold levels are mapped out right here. Eman, what I will say is I am publishing a scalp on gold today on Daily FX. I've already written it. That's going to go out to them and publish later this afternoon. So that's going to be your most up to date gold. But no, there's no weekly forecast from my end on Daily FX today. One other thing I wanted to show you guys, since we're looking at the euro crosses, euro yen, euro key. You guys remember this? You remember this daily chart? I presented this. Geez, must have been over a week ago at this point. In any event, I'm not sure why I can't find this. Here we go. 19th. You guys remember this chart? Just a basic daily chart. Didn't even put a scalp on it. All I was saying was we're coming off big support. Okay. 165.20 into 165.68. It's a big zone, but so is the ATR for Euro Key. Okay. Big support. Slope. This is all derived off this initial slope right here. The median line off that low gave us a pivot break, was resistance early in the week. A slope extending off that low that we made on September 20th, caught the exact lows this month. There was the rebound. We didn't make a material close above this line. Again, can't really stress enough how important it is to bring up that close, guys. You see that? The wicks on the candles look like they broke time and time again on this. On a closed basis, doesn't get much cleaner than that, does it? Does it? So look, we're back into support. You're marking divergence into this low. If you're holding a short on this, I would not do anything. As far as the long is concerned, I was looking for some exhaustion to give us a tell, but look at the intraday chart. Even that near-term advance cracked. Early in the week, there's the break of the initial weekly opening range low. Here's the 120-minute. And here was the dump. This dump, obviously on the longer-term charts, is right at key support again. The yearly low and the yearly low day close, which is still intact. 65.20, 65.68. Watch this into the close of the week. Okay, watch this into the close of the week. Inclination is that this does hold, but if it breaks down and we see a weekly close, there's a lot of room to go. Your first target on the daily chart would be way down here, 62.32, 62.40. Former swing highs from back here in May of last year, the 50% retracement of 2017 advance, big level. So just wanted to highlight that, guys. Watch this into the close of the week, but and then again, I don't really want to talk about dollar yen, but here it is. It looks like a big old consolidation to me. I really have no clue what this thing's doing, guys. So just stand clear of the dollar yen. The yen crosses that I've highlighted over this week are the ones I'd focus on to close the month. So Aussie yen, Kiwi yen, even Euro yen for Utah if you want to watch that. But dollar yen is sort of off limits for me as of now. All right, I'm going to wrap it up there. Guys, have a great weekend. Don't forget Jamie's up in a couple of hours. I will see you again on Tuesday night. I'll give you that update, and on Thursday for the next intraday strategy webinar, guys. Enjoy the weekend, and again, best of luck trading this week. Cheers.